Unlocking Crypto Fortune's top picks for 2025. Hey everyone, welcome back to the channel. Today, we're diving into the top cryptocurrencies you should consider investing in right now, especially as we look ahead to 2025. The crypto market, as you know, is incredibly dynamic, always evolving, and let's be honest, it can be a bit of a roller coaster. But with high risk often comes the potential for high reward, and that's what keeps us all so intrigued, right? I've been spending a lot of time sifting through the noise, looking at the fundamentals, the tech, the roadmaps, and the communities behind these projects. It's not just about chasing the next pump, but about identifying solid projects with long-term potential. Now I know what you're thinking. Uayezu, there are thousands of cryptos out there. How do I even begin to choose? And you're absolutely right. It's a crowded space. That's why today, I'm going to break down my top 5 picks. These are coins that I believe have strong foundations, innovative technology, and the potential to make significant moves in the coming years, particularly as we head towards 2025. We're going to look at what makes them tick, why they stand out from the crowd, and what factors could drive their growth. This isn't financial advice, of course, always do your own research, but I'm here to share my perspectives and hopefully give you a solid starting point for your own investigations. So grab your coffee, get comfortable, because we're about to unpack some serious crypto insights. We'll cover the big players, the established giants, but also some incredibly promising platforms that are pushing the boundaries of what blockchain technology can do. The goal here is to arm you with information, to help you understand the landscape a little better, and to get you thinking strategically about your potential crypto investments for 2025. Let's get started. Alright, let's kick things off with the one, the only, Bitcoin. You simply can't have a conversation about cryptocurrency investing without talking about Bitcoin. It's the OG, the trailblazer, the project that started this entire revolution back in 2009. When Satoshi Nakamoto, whoever they may be, unleashed Bitcoin upon the world, I don't think anyone could have predicted the sheer scale of the industry it would spawn. It's more than just a digital currency. For many, it's become a symbol of financial freedom and a new way of thinking about money. The most common analogy you'll hear for Bitcoin is digital gold, and honestly, it's a pretty fitting one. Like gold, Bitcoin is scarce. There will only ever be 21 million coins mined. This built-in scarcity is a fundamental part of its value proposition. In a world where central banks can print money seemingly at will, leading to inflation and devaluing currencies, Bitcoin offers a deflationary alternative. It's a store of value that isn't controlled by any single government or financial institution, which is incredibly appealing to a growing number of people. When you look at the market capitalization, Bitcoin absolutely dwarfs everything else in the crypto space. It consistently holds the top spot, and that dominance speaks volumes. It's the most recognized, most liquid, and arguably the most secure cryptocurrency out there, thanks to its massive decentralized network of miners. This network effect is incredibly powerful. The more people use and trust Bitcoin, the stronger and more valuable it becomes. It's a virtuous cycle that has propelled its growth for over a decade. One of the key events in the Bitcoin world that investors always keep an eye on is the halving. Approximately every 4 years, the reward for mining new Bitcoin blocks is cut in half. This reduces the rate at which new Bitcoins are created, effectively decreasing the supply inflation. Historically, these halving events have been followed by significant bull runs in the Bitcoin price. The next halving is anticipated around early 2024, which sets the stage for potential positive price action leading into 2025. We've also seen a massive shift in terms of institutional adoption. Big players like MicroStrategy, Tesla, at one point, and various investment funds have added Bitcoin to their balance sheets. Even countries like El Salvador have adopted Bitcoin as legal tender. This kind of mainstream acceptance was unthinkable just a few years ago, and it adds a significant layer of legitimacy and potential demand. The more institutions that get involved, the more capital can flow into the asset, potentially driving up its price. Now, let's be real, Bitcoin is volatile. The price can swing wildly, and it's not for the faint of heart. You'll see headlines screaming about crashes and bubbles, but if you zoom out and look at the long-term chart, Bitcoin has shown incredible resilience and growth. It's important to understand these risks and to invest only what you can afford to lose. However, for many, the potential long-term rewards outweigh the short-term volatility, especially when viewed as a long-term store of value. Compared to traditional assets, Bitcoin offers a unique proposition. It's largely uncorrelated with stocks and bonds, meaning it can act as a good portfolio diversifier. In times of economic uncertainty or high inflation, investors often look for alternative assets, and Bitcoin is increasingly fitting that bill. Its decentralized nature means it's resistant to censorship and seizure in a way that traditional assets held within the banking system are not. This is a powerful feature in an increasingly complex global financial landscape. For anyone serious about crypto investing, Bitcoin is often considered a cornerstone holding. It's the gateway for many new investors and typically represents the largest allocation in diversified crypto portfolios. Its established track record, brand recognition, and robust security make it the safest bet in a very speculative market. While other coins may offer higher percentage gains in the short term, Bitcoin provides a level of stability and trust that is unmatched. Looking towards 2025, several factors could continue to drive Bitcoin's value. Increased institutional adoption, clearer regulatory frameworks in major economies, the fallout from the next halving event, and continued global economic uncertainties could all play a role. The development of the Lightning Network, a Layer 2 solution for faster and cheaper Bitcoin transactions, also promises to enhance its utility as a medium of exchange, not just a store of value. So when you're thinking about your 2025 crypto strategy, Bitcoin absolutely has to be on your radar. It's the foundation upon which much of the crypto world is built. Understanding its fundamentals, its history, and its potential future trajectory is crucial. It's not just about the price, it's about the technology, the network, and the paradigm shift it represents. It's the king for a reason, and I don't see that changing anytime soon. Next up, we have Ethereum, and let me tell you, Ethereum is so much more than just another cryptocurrency. If Bitcoin is digital gold, then Ethereum is like a decentralized world computer. It took the core concept of blockchain technology that Bitcoin introduced and massively expanded its capabilities. Launched in 2015 by Vitalik Buterin and a team of brilliant co-founders, Ethereum introduced the idea of smart contracts, and that, my friends, has been an absolute game-changer for countless industries. So, what are smart contracts? Think of them as self-executing contracts where the terms of the agreement between buyer and seller are directly written into lines of code. They run on the blockchain, meaning they are transparent, immutable, and don't require a central intermediary. This programmability is what makes Ethereum so powerful. It's a platform on which developers can build decentralized applications, or dApps, for pretty much anything you can imagine. The ecosystem of dApps built on Ethereum is already vast and incredibly diverse. We're talking about decentralized finance, DeFi platforms that offer lending, borrowing, and trading without traditional banks. We're talking about NFT marketplaces where digital art and collectibles are bought and sold. We're seeing decentralized autonomous organizations, DAOs, gaming platforms, identity solutions, and so much more, all powered by Ethereum. It's like the foundational layer for a new, decentralized internet, often referred to as Web3. You've undoubtedly heard about NFTs, non-fungible tokens. While they can exist on other blockchains, Ethereum was really where the NFT craze took off. These unique digital assets, representing ownership of anything from art to music to virtual land, rely heavily on Ethereum's smart contract functionality to manage their creation, ownership, and transfer. This has opened up entirely new economies and ways for creators to monetize their work. One of the most significant developments in Ethereum's history was the merge, which transitioned the network from a proof-of-work consensus mechanism, like Bitcoin's, to proof-of-stake. This was a monumental undertaking, and it had two massive implications. First, it drastically reduced Ethereum's energy consumption by over 99%, addressing one of the major criticisms of older blockchain technologies. Second, it paved the way for future scalability upgrades, making the network more efficient. Speaking of scalability, that has been one of Ethereum's biggest challenges. As the network grew in popularity, transaction fees, known as gas fees, sometimes became very expensive, and transaction times could be slow. However, the Ethereum community is actively working on this through Layer 2 scaling solutions like rollups, for example, Arbitrum Optimism. These solutions process transactions off the main Ethereum chain but still inherit its security, allowing for much faster and cheaper transactions while alleviating congestion on the mainnet. Ethereum is undeniably the king of DeFi. The vast majority of decentralized finance protocols, by total value locked, TVL, are built on Ethereum. This ecosystem allows users to access financial services in a permissionless and transparent way, cutting out traditional intermediaries. The innovation happening in DeFi on Ethereum is breathtaking, and it's fundamentally rethinking how financial systems can operate. This is a multi-billion-dollar sector that continues to grow. Of course, Ethereum isn't without its competitors. There are many other smart contract platforms, often dubbed Ethereum killers, vying for market share. Some offer faster speeds or lower fees. However, Ethereum has a massive first-mover advantage, the largest developer community, and the most battle-tested infrastructure. This network effect is incredibly difficult to overcome, and Ethereum continues to innovate and adapt to maintain its lead. The Ethereum roadmap includes further upgrades designed to enhance scalability, security, and sustainability. Features like sharding, which will split the network into smaller, more manageable pieces to process more transactions in parallel, are on the horizon. These ongoing developments are crucial for Ethereum to support the next wave of dApps and users, and they signal a commitment to long-term growth and improvement. So, when I look at Ethereum for 2025, I see a platform that is maturing, scaling, and solidifying its position as the backbone of Web3. Its utility goes far beyond simply being a currency. The ETH coin itself is used to pay for transaction fees, to secure the network through staking, and as collateral in many DeFi applications. As the Ethereum ecosystem grows, the demand for ETH is likely to increase. It's an investment in the future of a decentralized internet and a more open financial system. Alright, moving on to our third pick, Cardano, often symbolized by its ticker ADA. Now, Cardano takes a very different approach to blockchain development compared to many other projects, and that's one of the things that makes it so interesting to me. It was founded by Charles Hoskinson, who, fun fact, was also one of the co-founders of Ethereum. He envisioned a blockchain platform built on a foundation of peer-reviewed academic research and a more formal, methodical development process. This emphasis on a scientific philosophy is really at the core of Cardano's identity. They're not about rushing things to market. Instead, every major development phase and component of the Cardano blockchain undergoes rigorous academic scrutiny and formal verification. The idea is to build a platform that is incredibly secure, scalable, and sustainable from the ground up, addressing some of the limitations they saw in earlier generation blockchains. It's a long-term vision, and they are very deliberate in their execution. Cardano aims to be a third-generation cryptocurrency, building upon the lessons learned from Bitcoin, first generation, and Ethereum, second generation. Its key focuses are often summarized as security, scalability, and interoperability, though sustainability is a huge part of their ethos as well. They want to create a blockchain that can handle complex applications and a massive number of users without compromising on decentralization or security. One of the unique aspects of Cardano is its layered architecture. It separates the accounting layer, which handles the ADA transactions, the Cardano settlement layer or CSL, from the computation layer, where smart contracts and decentralized applications will run, the Cardano computation layer or CCL. This separation is designed to provide greater flexibility for upgrades and to enhance security, as issues in one layer are less likely to affect the other. It's a thoughtful design choice. The consensus mechanism that powers Cardano is called Ouroboros, and it's a provably secure proof-of-stake protocol. This was one of the first POS protocols developed with such a high degree of academic rigor behind its security proofs. It allows ADA holders to participate in securing the network by staking their coins, and it's designed to be highly energy efficient, which is a big plus in today's environmentally conscious world. Cardano's development is famously structured in 5 distinct eras or phases: Byron, the foundation; Shelley, decentralization; Gauguin, smart contracts; Basho, scaling; and Voltaire, governance. We've seen the rollout of Shelley, which fully decentralized block production, and Gauguin, which brought smart contract functionality to the mainnet through Plutus and Marlowe. The current focus is heavily on the Basho era for scaling and Voltaire for on-chain governance, which will eventually allow ADA holders to vote on the future development of the protocol. With the introduction of smart contracts in the Gauguin era, we're now seeing a burgeoning ecosystem of dApps and projects building on Cardano. While it's still earlier days compared to Ethereum, the community is passionate, and developers are attracted by Cardano's robust framework and the promise of high security. We're seeing projects in DeFi, NFTs, identity solutions, and more starting to take root and gain traction. Cardano has also placed a significant emphasis on real-world use cases, particularly in developing nations. They've been involved in projects in Africa, for example, focusing on areas like digital identity, supply chain tracking, and educational credentialing. This focus on providing solutions for unbanked populations and improving infrastructure in emerging markets is a noble goal and could lead to widespread adoption if successful. It's a different angle than many other cryptos take. The native cryptocurrency of the Cardano blockchain is ADA. It's used for paying transaction fees, for staking to secure the network and earn rewards, and it will play a crucial role in the governance model once the Voltaire era is fully implemented. As the Cardano ecosystem grows and more dApps launch, the utility and demand for ADA are expected to increase, which is a key part of its investment thesis. Looking ahead to 2025, Cardano's success will largely depend on the continued growth and adoption of its dApp ecosystem, as well as the successful implementation of its scaling solutions in the Basho era and its governance model in Voltaire. If they can deliver on their ambitious roadmap and attract a significant user base, Cardano has the potential to be a major player in the blockchain space. Its methodical, research-first approach might take longer, but the goal is to build something truly resilient and impactful for the long haul. Now let's shift gears and talk about Solana, a project that has absolutely burst onto the scene with its incredible transaction speeds and super low fees. If there's one thing Solana is known for, it's performance. We're talking about the capability to process tens of thousands of transactions per second, which is orders of magnitude faster than many older blockchains. This kind of throughput is what really gets developers and users excited, especially those building high-frequency applications. The magic behind Solana's speed lies in its unique consensus mechanism, which combines proof of stake, POS, with a novel concept called proof of history, POH. Proof of history isn't a consensus mechanism on its own, but rather a way to create a verifiable chronological record of events on the blockchain without requiring all nodes to communicate constantly. Think of it like a cryptographic clock that timestamps transactions before they are bundled into blocks. This POH system allows nodes to agree on the time and order of transactions much more efficiently, which is a key factor in achieving Solana's high throughput. When combined with other architectural innovations like its C-level technology for parallel smart contract execution, it creates a blockchain that feels incredibly fast and responsive to users. Those low transaction fees, often just fractions of a cent, are also a massive draw, especially when compared to the sometimes high gas fees on networks like Ethereum during peak times. Because of this speed and low cost, Solana has quickly become a popular platform for developers building dApps that require high performance. We've seen a vibrant ecosystem emerge, particularly in areas like DeFi, NFT marketplaces, and blockchain-based gaming. Projects that might struggle with latency or cost on other chains can often thrive on Solana, leading to a lot of innovation and experimentation. The user experience can feel much closer to traditional web applications. This appeal to developers is critical. A blockchain is only as valuable as the applications and services built on top of it. Solana has done a great job of fostering a strong developer community and providing tools that make it easier to build. The speed at which new projects launched on Solana during its growth phases was truly remarkable, showcasing the demand for a high-performance Layer 1 blockchain. However, it's important to address the elephant in the room. Solana has experienced several network outages and periods of degraded performance in its past. These incidents raised concerns about its stability and reliability, especially for a platform handling significant financial value. The Solana team and community have been very open about these challenges, and have been working diligently on implementing fixes and improvements to enhance network robustness. This is a critical area to watch. When you compare Solana to Ethereum, they are often seen as direct competitors, both vying to be the leading smart contract platform. Solana offers a different set of trade-offs, incredible speed and low cost, but with some past questions around decentralization, due to higher hardware requirements for validators, and stability. Ethereum, on the other hand, has a longer track record, greater decentralization, but has historically struggled more with scalability and fees, though Layer 2s are changing that. The native token of the Solana network is SOL. It's used for paying transaction fees, for staking to help secure the network and earn rewards, and for governance. Given Solana's proof-of-stake model, staking SOL is an integral part of its economic security. As more applications are built and used on Solana, the demand for SOL to pay for transactions and participate in the ecosystem naturally increases. There are some really exciting and high-profile projects that have chosen to build on Solana, ranging from major NFT marketplaces to innovative DeFi protocols, and even collaborations with mainstream brands. These partnerships and the growth of native Solana projects help to solidify its position in the market and attract more users and developers. The energy and pace of development within the Solana ecosystem are palpable. Looking towards 2025, Solana's trajectory will depend heavily on its ability to maintain network stability and continue to scale effectively while fostering further growth in its dApp ecosystem. If it can overcome its past technical hurdles and prove its long-term reliability, its performance advantages make it a very compelling platform. The ongoing improvements and the sheer speed it offers could make it a dominant force for applications that demand high throughput, potentially carving out a significant niche or even challenging established players. Last but certainly not least on my list for today is Polkadot, a project with a truly ambitious vision to create an internet of blockchains. Founded by Dr. Gavin Wood, another co-founder of Ethereum and the inventor of Solidity, Ethereum's programming language, Polkadot is all about enabling different, independent blockchains to communicate and share information and value in a secure, trust-free way. This concept is known as interoperability, and it's a huge deal. Think about it, right now most blockchains operate in silos. Bitcoin does its thing, Ethereum does its thing, Cardano does its thing. And they can't easily talk to each other directly. Polkadot aims to solve this problem by providing a foundational relay chain that connects various specialized blockchains called parachains into a unified network. This allows for seamless cross-chain communication and data transfer, which is incredibly powerful. The architecture of Polkadot is quite unique. At its core is the relay chain, which is responsible for the network's shared security, consensus, and interoperability. Then you have parachains, which are independent blockchains with their own specific functionalities, governance, and tokens, but they all connect to and benefit from the security of the relay chain. There are also parathreads, which are similar to parachains but operate on a pay-as-you-go model, offering more flexibility for projects that don't need a dedicated parachain slot. And finally, bridges allow Polkadot to connect with external blockchains like Bitcoin or Ethereum. To become a parachain on Polkadot, projects typically have to win a parachain slot auction. These auctions are competitive events where projects bid, using Polkadot's native token DOT, to secure a lease for a slot on the relay chain for a set period. This mechanism ensures that only promising and well-supported projects get to connect, and it also creates utility for the DOT token. It's a fascinating economic model. The DOT token plays several crucial roles within the Polkadot ecosystem. Firstly, it's used for staking to secure the relay chain through Polkadot's nominated proof-of-stake (NPOS) consensus mechanism. Secondly, DOT is used for bonding to lease parachain slots, as mentioned. And thirdly, DOT holders can participate in the on-chain governance of the Polkadot network, voting on protocol upgrades, treasury proposals, and other key decisions. This makes DOT integral to the functioning and evolution of the entire network. Dr. Gavin Wood's vision for Polkadot is to create a sharded, multi-chain network where different blockchains can specialize in what they do best, rather than trying to be a one-size-fits-all solution. For example, one parachain might be optimized for DeFi, another for NFTs, another for identity, and they can all interoperate seamlessly. This specialization, combined with shared security, could lead to a much more scalable and efficient blockchain ecosystem overall. To make it easier for developers to build these custom blockchains, Polkadot offers the Substrate framework. Substrate is like a modular toolkit that provides developers with the core components needed to build a blockchain from scratch, which can then be easily connected to Polkadot as a parachain or run as a standalone chain. This significantly lowers the barrier to entry for creating new application-specific blockchains. You might also hear about Kusama, KSM, which is Polkadot's canary network. Kusama is an independent, live blockchain built with a similar codebase to Polkadot, but it's designed for radical experimentation and early-stage deployments. Projects often launch on Kusama first to test their technology in a real-world environment with real economic incentives before deploying on the more stable and secure Polkadot network. It's Polkadot's wild cousin, and it moves much faster. The potential for Polkadot is to foster a truly multi-chain future where innovation isn't confined to a single platform. By enabling interoperability, Polkadot could unlock a huge amount of value by allowing assets and data to flow freely between different blockchain ecosystems. This could lead to new kinds of decentralized applications that leverage the strengths of multiple chains simultaneously. It's a very forward-thinking approach. As we look towards 2025, the success of Polkadot will depend on the number and quality of parachains that connect to its network, the growth of user activity across these parachains, and the continued development of its core technology and bridges to other major ecosystems. If the vision of a seamlessly interconnected web of blockchains materializes, Polkadot, with its robust architecture and focus on interoperability, is perfectly positioned to be at the center of it. It's an investment in a more connected and collaborative blockchain future. And there you have it, folks. These are the top cryptocurrencies to keep an eye on as we head towards 2025: Bitcoin, Ethereum, Cardano, Solana, and Polkadot. Each of these projects brings something unique to the table. From Bitcoin's established store of value to Ethereum's smart contract dominance, Cardano's research-driven approach, Solana's incredible speed, and Polkadot's vision for an interoperable multi-chain future. It's a fascinating landscape, and the innovation happening is truly relentless. I genuinely believe these have strong potential, but the crypto world waits for no one. Remember, always do your own research before investing. This space is incredibly volatile, and while the potential rewards can be significant, the risks are just as real. My goal today was to give you a solid overview and some food for thought, not to provide financial advice. Take what you've learned, dive deeper into the projects that resonate with you, understand their technology, their teams, their communities, and their tokenomics. The more informed you are, the better decisions you can make for your own financial journey. If you found this video helpful, and I really hope you did, don't forget to smash that like button. It really helps out the channel. And if you haven't already, make sure you subscribe and hit that notification bell for more updates on all things crypto, finance, and investing. We've got a lot more content planned and you won't want to miss it. Thanks so much for watching, stay curious, stay informed, and I'll see you in the next video.